Let's be honest, dealing with a life insurance payout usually happens at a really tough time, and the absolute last thing you need is more confusion. So in this guide, we're going to break down the entire process, step by step, to make it all feel a lot clearer. Let's jump right in with the first question that's probably on your mind.
Okay, so a loved one has passed away and you find out you're the beneficiary of their life insurance policy. Now what? What actually happens next? That's the big question we're going to tackle today, and we'll start with the one thing everyone thinks about first, the money.
All right, first things first, let's talk numbers. To give you some context, it helps to know what the average life insurance payout in the US even looks like. This will give us a good starting point for what to expect.
So, based on the latest data, that average payout is somewhere between about $168,000 and $250,000. Now, that gives you a general idea, but I really want to stress that this is just a ballpark number. This range often covers things like paying off a mortgage or replacing a few years of income. Because in reality, the actual number can swing wildly. Some policies for, say, final expenses, might just be a few $1,000s. But others, the ones used for big estate plans, can easily go into the millions. So what causes such a huge difference?
It really boils down to four key things. First, the type of policy. Was it a temporary term policy or a permanent whole life policy? Second, how much was paid into it? Higher premiums usually buy a bigger death benefit. Then there's the age and health of the person when they bought the policy. And finally, any special add-ons, which are called riders, that can increase the final amount.
Okay, so you have a general sense of the amount. The next huge question is about timing. How long does it actually take to receive the money? This gives you a really good look at the typical journey. The clock officially starts the day the claim is filed. Now, one thing to know is that if a policy is less than 2 years old, it's in what's called a contestability period. All that means is the insurer does an extra review. But for most claims, the process is pretty smooth, and the payout usually arrives in about 30 to 60 days.
But of course, delays can happen. If the cause of death needs to be investigated, that can add time. Same thing if the policy is brand new. Honestly, though, the most common delays are usually things that can be avoided, like incomplete paperwork or some confusion over who the beneficiary is supposed to be.
So, let's say the claim is approved. Awesome. You might think they just mail you a check, but it's not quite that simple. You actually have some really important choices to make about how you receive the money. And this right here is the most popular choice by a landslide. Most people take a single, one-time payment called a lump sum. And the best part? In most situations, this money is completely tax-free, which is a huge advantage. But remember, it's not your only choice. You could also pick installment payments, which breaks the money up into regular checks over a few years. Or you could choose a life income annuity, which is a powerful tool that literally turns the payout into a guaranteed paycheck for the rest of your life. And a final option is a retained asset account, where the insurance company basically holds on to the money for you and you can just write checks from it as you need it.
Receiving a large sum of money all at once can feel a little overwhelming, right? It's a big responsibility. So, let's talk about how to create a smart plan for it, one that really sets you up for the future.
Here's a simple but really effective game plan. Step 1. Pay off debt. Getting rid of high-interest debt frees up your cash flow and just reduces stress. Step 2. Create an income stream. This is all about turning that lump sum into a reliable paycheck. Step 3. If you're eligible, think about funding a Roth IRA. It's a great way to let some of that money grow tax-free. And Step 4. Plan for long-term care down the road. It brings so much peace of mind.
This all leads us to maybe the most important question of all. How do you take this one-time payout and turn it into lasting financial security? Something that can support you and your family for decades.
And this quote just hits the nail on the head. One of the most powerful strategies is to use a financial tool designed for exactly this purpose. An annuity can take that lump sum and transform it into a predictable, reliable stream of income that you are guaranteed to never outlive. So let's be super clear on what this is. A life income annuity is just a contract. You give the insurance company a portion of the payout, and in exchange, they promise to send you a guaranteed check every single month for the rest of your life. It's basically like creating your very own personal pension. Figuring all this out, lump sum versus an annuity, it's a big deal. And it's totally normal to want some guidance. You don't have to make these decisions alone. And that's exactly where a resource like the Annuity Expert can really help you see which options fit your life. We can help you compare all the different strategies side by side. You'll get to talk with a licensed professional, not just some salesperson. And what's really important to know is that our services are always completely free to you. There's never any pressure and absolutely no spam.
So, what's your next step? If you're expecting a life insurance payout or you just want to plan ahead, we invite you to reach out for a free, no-obligation chat. You can call us at 770-755-1565 or visit our website to get started. Taking this one simple step can help make sure that a life insurance benefit brings you true, long-lasting financial security.